Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, a real doozy for you. We've got CleanSpark Q1 earnings to review. Anthony's got his tables, charts, and analysis all ready to go. In addition to that, some more big news out of Bit Digital. We've got our interview with Sam Tabar coming up in just a few hours' time. And on top of all of that, Soluna monthly production for the month of January. A lot to unpack this Monday morning. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding any of these three stocks, how you felt about these press releases, and your outlook for the remainder of 2025. Now, with that being said, let's get into today's video. Okay guys, so that's right. Monday morning, we have a highly anticipated interview with Sam Tabar, CEO of Bit Digital, in just a few hours time. Anthony, they came out with more big news today. Just a great interview opportunity. Going to get some details on the white fiber expansion or launch and now this new client announcement. So that one's super exciting. We also have CleanSpark earnings from last week to talk about, and Soluna's come out with a business update for the month of January. Before we get into that though, Bitcoin price in the $97,000 range. We've been hovering here now, Anthony, for quite some time. The miners once again split bag this morning with IREN and Core Scientific once again leading the pack.
Yeah, a steady opening, nothing overly changing in the mining space there, to be honest with you. We had obviously the big updates last week from CleanSpark in regards to earnings. We got earnings coming out from IREN on Wednesday, so they're anticipated. Expect them to be good. And we'll cover a little bit of CleanSpark's earnings today on the podcast. But yeah, nothing major, no massive volatility expected there. The Bitcoin price did drop down as low as 94,000 over the weekend, but then it's made its way back up to 97, so it's in that banding there. We'll wait for further updates from our friend Huddle 15 as to where the ETFs are seeing Bitcoin at the moment. Are they taking any more on? But we do have an update from Michael Saylor today, which we'll cover regarding MicroStrategy may have been out in the shops again, purchasing a bit more Bitcoin.
Yeah, it looks like it. 7,633 Bitcoin, Anthony, for a cool $742 million. So a little bit different scale than you or I maybe purchase in our accounts, but Michael Saylor up to it again. We also had the Eagles win the Super Bowl yesterday in memory or honor of Dr. Lewis, who unfortunately did pass away over the weekend, Anthony. So sending our condolences there. I know he was a friend to the channel. They've got a Spaces going on for DR this Friday, which you and I will be attending, but we definitely wanted to make sure we spend a moment or two just remembering his legacy as well.
Absolutely. Very, very sad news. Dr. Lewis was one of the good guys in the space. There's a few bad actors in the space, but I can honestly say Dr. Lewis was not in that bracket. He's one of the good guys. I wish more people were just like him, actually. He basically, him and his business partner Adrian, they came up with the Alpha Insights, and they've been interviewing a lot of the same CEOs that we have on our YouTube channel and putting out great content on a regular basis. The sad news came in last week, and I was taken back by it. It was I'm still thinking about it now. It's we were due to meet him in March at the Miner Disrupt. We were both, all three of us on the speaker panel for that conference. And that would have been the first time we got together. So I was really looking forward to that. He's been on the podcast twice, on the live show. We don't do many live shows, but Dr. Lewis came on the live shows and had great input to those live shows that we did with him. So thinking about him today, but yeah, a good result for the Eagles last night. And looking forward to the Spaces meeting on Friday where we can tell a few more of our stories about DR.
Yeah, it definitely hits close to home. And outside of all the great content in the Bitcoin mining space, also a veteran, a business owner, a father, had two great kids, a wife. So much to so many people, and obviously sending our thoughts and best wishes to the family. So, with that being said, Anthony, moving into the main event here, CleanSpark Q1 earnings. We covered this, or anticipated expected results last week. Then they came out with earnings very well received by the market. I think they were up nearly 10% towards the end of last week. We had an opportunity to dig into the numbers. You've put together one of your tables charts to get into the analysis here. What did you see from CleanSpark?
Yeah, they were good numbers as to be expected. Bear in mind, got to remember where the Bitcoin price was at the start of or the end of the previous quarter, where it finished at the end of this particular quarter, which was the 31st of December 2024. So in that last 3 months, they mined, produced, I think, 1,945 Bitcoin. Total revenues, 162.3 million. The cost of those revenues, which is predominantly the energy cost, was 70.3 million. That gave them a gross margin of 92 million, which is in terms of percentage, because that way we can then do a comparison with other miners. 56.7% gross margin. That's pretty good. That for a company out there. We do know some other companies have got access to cheaper energy. CleanSpark came out and said that their average energy price over that period was about 4.6 cents a kilowatt hour. And to be honest, and fair to them, they've been saying, in that 4.2 to 4.8 range throughout, the last few months anyway. So 4.6 was their average over that period there. Well, let's see what some of the other miners bring out. They've been quoting low numbers. So when we've got IREN's coming out on Wednesday, and they've been achieving, I think, less than 3 cents on some of their months. So see how that reflects in their gross margin. But yeah, really good there. Then we come down to the operating costs, which everyone always wants to look at in a bit more detail. And to be honest with you, operating costs weren't significantly increase. Or in fact, there was some savings in operating costs from previous periods. But if you looked at where it was from the same period the previous year, then they're fairly flat. So G&A costs of 10 million. Payroll expenses, if you take out the stock-based compensation, which was just over 3 million, they came in at 17.8. That was a bit higher than the previous period because they have a significantly more staff now. If you think about it, they took on Grid. They've got a sizable company now, so they've probably taken on more staff as they built more locations. I think, if I look at CleanSpark, they've probably got more locations than any other mining company that we look at the moment. So having that amount of sites requires, obviously staff to manage those as well. So slightly higher on payroll, but not significantly higher. Not in terms of like double or treble. It was about 25% higher. Professional fees at 3.2 million. One thing that did catch my eye, they paid themselves a dividend of 5.1 million. Now the dividend goes to those directors that are in holding the Series A preference shares. And I did a bit of digging over the weekend. And with the likes of Penny, we had a little conversation about the CleanSpark earnings. They've got, I think 1.75 million shares of Series A preference shares. Those are split between three of the senior directors. That's Zach, Matthew, and Larry McNeil. So they've all got the same amount, probably in the region of about 583 million of those each. So that dividend is split between those three there. Now, what catches my eye is obviously the dividend payment is 2% of net profit. Now, the company came out with a net profit of $246 million. And for the sharp-eyed of you, be asking the question, how can they come out with a 246 million profit when they only had revenues of 162 million? Well, that is down to the fact that the Bitcoin that they've held over that period has increased in value. And remember, we talked about the FASB rules where you're allowed to value it at the current rate rather than only value it when it went down in value, as previously all these mining companies are doing. Well, they took an absolute gain of 260 million in terms of the valuation of that Bitcoin over that period there. So that gave them a great net income, 246. If you think about a dividend payment based on 2% of that figure there, that gets you close to the 5.1 million dividend. Now, thinking about this going forward, if Bitcoin price doesn't do as well next time in the next quarter, they potentially could make a loss, because obviously it's great when it works in your favor, but when you have to value down Bitcoin valuation, they've got over 10,000 Bitcoin in the treasury. This can work against them. So what we might see here is we might see dividends sort of paid out every time the Bitcoin price rallies, and there's no dividends paid out when it drops in value. So it's not giving us sort of like I would say, a true effect of a dividend based on profits, because these are unrealized gains. They're not realized until you do something with the Bitcoin. So it looks like taking advantage of the FESB rules to pay the Bitcoin. They haven't paid many dividends prior to this period. I think they've paid just over, maybe close to 4 million in the last 2 or 3 years. So this was a sizable dividend to pay out in this quarter. Bear in mind that their salaries are listed in public, and they do very well in terms of salary. They also get a bonus which can be up to 200% of the salary for the senior directors, and they also get some shares based on the fact that if the company does well, then CleanSpark do well, and they have some metrics that are measured against other mining companies. So if they appear to be one of the best mining performers in the space, and the share price also performs well in accordance with that then potentially that can give them a lot of these, what they call long-term incentive shares. And, if they do as well as they're expecting to do, that could mean something like in the region of about $91 million worth of shares being issued in October 2025. So, that's the company doing well against all peer miners. And, yes, you want to make sure, the shareholders also do well. So some of the metrics are based around share price. So if the share price is increasing, then the management of CleanSpark are also benefiting from that in terms of additional shares that they'll receive as part of their compensation package. In terms of net cash flow, I calculated that at 55.7 million. And so, that it means that they're operating within their means. They can pay their energy, they can pay their cash costs and still operate. But when you start taking things like depreciation into account and stock-based compensation, depreciation, I think was over 60 million. So, those figures there can 66.6 million as the slide dictates, sorry, and stock compensation of 3 million. That's close to 70 million in additional costs, which are real costs, and naturally that would have put them into a sort of like into a net loss position, but for the gain of Bitcoin price. Moving on to the balance sheet extract, everything really positive at the moment in terms of where they are in terms of debt, in terms of their assets. So we always want to look at current assets versus current liabilities, just to make sure they've got enough cash over the next 12 months to pay their liabilities. Which you can see from the slide, they've got 96.7 million of current liabilities that need to be paid in the next 12 months, but they've got over $1 billion in current assets, which they can rely on to pay that debt. So they've got a 12.67 times the amount of assets and liabilities they're required to pay. So really, really healthy. Arguably, you could say that they're not utilizing current assets as well as they could be, but I'm sure over this 12-month period that some of those current assets will be utilized in terms of growing the company bigger than where they are at the moment. In terms of net assets, $2 billion of net assets now. So that's all the assets minus all the liabilities. If you think about that from a market capitalization standpoint, market capitalization as at the end of last week was just over 3 billion, 3.1 billion. They've got debt, which is a lot of it is focused around the convertible note that they recently took out. So that takes their debt to 653. Not overly significant when you think of the size of the company now. Cash and cash equivalents. So again, 276 million of cash in the bank, and over $1 billion of Bitcoin hodl in the treasury as well. So, 1.3 billion that they have to utilize. Enterprise value, $2.5 billion. And then we can look at a few of the metrics in terms of market cap to net assets. Market cap 1.57 for every dollar of market cap, you get a dollar of net assets, and debt to equity ratio at 0.32. So very healthy that way there. Couple of metrics that I've come up with in the past. This is about the enterprise value for every hash rate. This is the cost valuation, so you want this to be as low as possible. Their current installed hash rate of just over 40, which they touched for the first time in end of January, $63 million per exahash, and based on their target of reaching 50 by the end of by the middle of 2025, $50.5 million. And that's with a total outstanding shares of 280 million shares. Now, that's interesting as well, because when they took that convertible note out, they did say they were going to buy back some shares, and I think they bought back just over 12 million shares in the period as well. So that's showing there that the total number of shares has declined from previous by about just over 12 million. So, overall, very, very good set of results. I also do a cost to mine a Bitcoin. So this then, really looks at breaking down the revenues into obviously Bitcoin. We know they produced 945. So the average revenue for each of those Bitcoins was $83,448. The energy cost, or the direct cost associated with that, was 36,139. That gives them a margin of just over 47,000, gross margin 56.7%. Then we break down the operating costs per Bitcoin. So we get the G&A costs for every Bitcoin, just over 5,000, payroll expenses, just over 9,000, professional fees, $1,600. A little bit of interest there that they're paying. So they do get interest on the payment in the bank, but they're also paying interest on the convertible note. So the netting effects of that is about $43 in terms of interest paid. The dividend, that is, that's a cost that, they're receiving effectively, an enhancement to their package there. So that's a true cash cost there. $2.6 thousand in terms of dividends. That gives them total operating costs of $18,658 for the Bitcoin. That added to the cost of the energy, which we've already alluded to, is $36,000, gives a total cost to mine of $54,797 for CleanSpark. That gives them a margin of 34.3%, or as a total cost, as a percentage, 65.67%. So with the Bitcoin price at the moment, they're literally achieving around about 28, getting on for $30,000 per Bitcoin in profit, having met all their cash costs during the period. So, and this was based on the average Bitcoin price of 83. Well, we've already said today, Bitcoin price is 97,000, and it's been significantly higher than 83,000 since the beginning of January, and we've only got effectively now about 7 weeks left of quarter two for CleanSpark. So you could say that potentially we could have in terms of mining Bitcoin, a healthy position. Obviously, we need to make sure that the value of the Bitcoin at the end of March is higher than it was at the end of December. And at that price, it was about I think $93,000. So as long as it's above that price there, that will give them an increased valuation through the income statement and through the balance sheet. But overall, as I say, good set of results. Not too comprehensive today, but you can go in and have a look at their statements. They're laid out in a good way, so you can catch all the information quite quickly.
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. Yeah, I always like how you break down the cash costs, Anthony, but depreciation is such a big component here. Obviously, these fleet upgrades aren't free, very CapEx intensive, so always important to call that out. And like you say, paying bonuses or dividends on unrealized gains does get a little bit murky, especially as you say, if Bitcoin price drops next quarter, I doubt they'll be mailing those dividends back. So interesting to see that play out. Now, Anthony, we did get an update from Bit Digital. We're not going to go into it because we've got Sam on the podcast right away here, securing a new multi-year co-location agreement with what they call an AI leader in the hardware sector. So we'll get into that with Sam in a second here, but we did want to talk about the Soluna update because they came out with their January production results. This is one we've covered extensively on the channel throughout 2024, continuing to put up bigger and bigger projects.
Yeah. And bear in mind, Soluna's self-mining at the moment is quite a small part. Obviously, they have plans to increase that with likes of the Dorothy project, which is looking at self-mining and hosted mining. But if you look at their self-mining, we did see a little bit of a drop in their hash rate for the month of January. Now, this could be down to obviously weather conditions. We've seen that with a few other miners there. So they're only able to operate at an average of 622 petahash. In December, it was 672, so 50 petahash. And so that can be easily put through like as a curtailment of energy. But when we get John on the podcast next, we'll talk about self-mining. We have seen it come down from where it was at its highs, which is over 800 petahash. So we've seen it drop a little bit lately, whether it's the focus maybe towards hosting. But bear in mind, January was a cold month for many of the miners, and we saw a drop down in operational hash rate for literally every miner on the actual table. So in terms of hosted hash rate, this came down as well. This had a bigger and more significant impact. This was about zero point 0.4 of an exahash coming down there. So it's now at 1285. Again, it could be the weather, it could be potential customer leaving, etc. But again, we'll get more off John. In terms of, they don't hodl Bitcoin at the moment, so they sold all their Bitcoin. And in terms of Bitcoin mined per exahash, 16.1. That if you think about the top performing miner at the moment, which I believe is CleanSpark for the month of January, they achieved 18. So about 10% lower than the top performing miner, not the bottom performing miner by any street of imagination, but a little bit behind some of the top performers. There's quite a few in the 17. So hopefully we'll see an improvement next month.
They also gave some great photos here, Anthony, of their project updates. Dorothy 2 specifically. They talk about Dorothy 1A, Dorothy 2 coming online here. So great to see those continuing to roll through as well.
Yeah, on the and we'll put a link to the update in the actual comments there. But they do, Dorothy 2, the substation interconnection was successfully completed. And now it's looking now to sort of like energize the site now. So they're coordinating with the key partners to finalize grid and wind telemetry data to complete that checklist for the ERCOT operations. And they've also completed a hosting tender with hyperscale miners who are interested in contracting for hosting. So lots of things happening with Dorothy 2. Project Grace, which is behind the meter architecture. It's progressing well. 3 different cooling technologies identified that can meet the BTM requirements. Yeah, they have as I say, they have a number of other projects on the go there. Project Ada, which is the 1 megawatt AI project that they're doing there, and they've got 2 new contracts for GPUs at the final stage of negotiation. So that'll get them to where they need to be on there. The AI pipeline now exceeds 1,500 H100 GPUs since the DeepSeek announcement. So also their request for H200 has also increased. So things developing quite well in terms of their HPC. They're also in the process. So this is success from their customers. Now, one of the customers is actually Bit Digital, and they're in the process of deploying a 3rd expansion request with the customer as well. So looks like Bit Digital are moving. Remember, they had a change of host contract, so they're moving their miners. It looks like they're moving to Soluna, so we'll get further updates. Maybe we get that from Sam today. But overall, a good update. There's a lot more behind the door once you start digging into Soluna. So I'd get people to have a look through the update. There's a lot to read. They put out a quite a significant update based on all their projects, give you an update on everything that's happening. We've covered pretty much the self-mining elements today, but have time to read through the various projects. These projects are getting quite big. I mean, Project Catty is 166 megawatts. Project Dorothy, which is two projects, Project Dorothy 1, Project Dorothy 2, also significant projects as well. So, spend some time to have a look at those. They've got a lot of pipeline, well over a gigawatt of energy in the pipeline there, which they can utilize as and when the projects get put together. So a lot more. We'll get John on the podcast again soon to give us further updates.
Yeah, we're looking really forward to that one, continuing to see that growth in 2025. So there you have it, you guys. Some great updates to start the week. Again, we'll be back shortly with Sam Tabar, Bit Digital. And we've spoken a few times about IREN this week. We've actually got Daniel Roberts, co-CEO and co-founder of IREN, on Thursday as well. So a big week ahead. Hit the like button. Feel free to subscribe. We'll see you back here shortly.